Weekly pivots. Somebody asked me at the break about weekly pivots. What you can do is you can calculate weekly pivots from midnight to midnight, like midnight Sunday to midnight Sunday for the entire week, where you just eyeball it and you get the open, high, low, close pretty much the way we did it just now. Same philosophy. The close would be the open on the Sunday midnight, and then you take the close on this Sunday over here, and then you eyeball the high and the high and the low in between, and then you calculate weekly pivots using the same calculator that we just did here. Just use the weekly numbers in here. And the advantage to that is you then have a daily set of pivots and a weekly set of pivots that you can use. And it's important because in situations where the gap between pivot points, daily pivot points, is wide, you could also be looking at the weekly pivots, which would fill some of the gaps. And the other thing is that sometimes you'll notice that price action goes way beyond the pivot points. On some days it's extreme and it exceeds the pivot points to the high side or exceeds the pivot points to the low side. It goes right below all support levels, or it goes way above all resistance levels. Well, the weekly pivots could be used in those cases to provide other buy and sell points. Okay? I like this suggestion here. This is from Hudson Lee, who lives in Australia on the Gold Coast. Is there such a place as Gold Coast, Australia? I think there is. This is actually brilliant. If you're trading Monday, the question is, where do you get your pivot points from? If you're trading the Monday session, do you use Friday's pivots or do you use Sunday's pivots? That's a question that a lot of people ask. And I never really had a good answer because I tell people to avoid Mondays. But what Hudson suggested is, oh, let's just read it. You can get a better reading on pivot points for Monday by calculating them based on taking the open, high, low, close from 12 a.m. Friday to midnight Sunday. You get the data from the 1 hour chart by manually looking for the highest high and lowest low during that time. The open would come from 12 a.m. Friday and the close would come from Sunday midnight, and then use the pivot calculator. Actually, there's an error on that chart that I have to correct. There's two words, highest high. So is that clear to everybody? Otherwise, if you don't do it this way, you have to take the open, high, low, close from Friday or Sunday from Monday, and which one do you use? And there are ways of working with that, and the way you work with it is if you have an extreme Friday and a narrow Sunday, then work with Friday. Or if you have a narrow Friday and an extreme Sunday, then work with Sunday. But it's kind of hairy-fairy. I like this one better because it takes the price action it really looks at price data from Friday all the way through Sunday, and I like that solution. Now, market hours. Most of you know this. I don't know that we need to go through this, but this slide will tell you when the various markets open, and it's in your package that's going to be mailed to you. This is the study that George Smith did on the various time frames. He did a study over a year's period. Don't ask me why he did it, but I'm impressed with his analysis. And he came up with the busiest trading times, irrespective of currency. And they turned out to be in here and in here, and actually this window was better than this window. You got more hits in here, so that's useful information for people who don't like to trade at night. And based on that information, Jeff and I got into a discussion at coffee break. You can recalculate your pivots at, say, 7 a.m. and 1 p.m. Eastern Time. And the reason I suggest you do that, or you can do that, is you can recalculate your pivots here and here. That doesn't mean to say the pivots you calculated at midnight are no good. It just means to say that if you were to recalculate the pivots here or here, you have a better set of numbers to work with in anticipation of the next session, okay? But you don't have to do it. You can still work with the numbers from midnight.
What are the numbers in the right-hand column?
Oh, this is on a ranking out of, I think, a scale of 1 to 100, how each hour ranked. Like obviously 4 p.m. is nothing, 9 a.m. is 28. It was just his way of ranking the hours.
Oh, okay, so the higher the number,
The more trades.
okay.
Okay. But you can calculate your pivots based on midnight to midnight, and that should do you for the entire trading session. The only advantage of recalculating your pivots after the London session or the New York session is, let's suppose you have a wild day like we had on Friday during the New York session. You probably would want to recalculate your pivots because of the extreme price action. Okay? That's all I'm saying. If we had lots of action in here, which we sometimes do, you'll have a very volatile session with the euro during the London session. You may, and you're going to trade the New York session, you may want to recalculate your pivots at 7 a.m. It's just recalibrating the pivots is all it's doing. You don't have to do it, but it brings you that much closer to the action.
So if you are recalculating the pivots at 7 a.m., you would take your opening price at 7, or?
You would go 7 to 7, 7 a.m., 24 hours to 7 a.m.
Oh, okay.
Always 24 hours. Here's an example of where you can trade based on trend line break. Here we had an uptrend right here connecting this swing point, these two swing points here. And when price broke through that trend line right there, that was a good spot to go short. That coincided with the start of the London hours right here. The euro tanked. And then it did a swing at the beginning of the London hours. You'll sometimes see that the euro does pivotal changes at those two time points. What I'm saying on this slide is just reinforcing that this major move started at the beginning of the London session, and you can see that it went up quite dramatically. Now, if you're wanting to convert GMT time to local time, this is how you do it. These are the formulas. It's done for you here in table form, and you don't have to write this down because you're getting a copy of this. What would you have done here? What do we have? What do we have right there? Hammer. We got a hammer there at a buy point, and we've got positive divergence here on MACD. See price going down, MACD waving up. I'd say buy. Okay, what would you do here? Why?
Spinning top, spinning top.
Boy, we got a spinning top, and we've got a double top, spinning top right there.
Got rejected at R2.
And it was at a resistance level. It was bumping up against R2, which is a sell point or a resistance level. What would you have done here? Hammer. We got a hammer there at a buy point. And we've got positive divergence here on MACD. See price going down, MACD waving up. I'd say buy. Okay, what would you do here?
I noticed that it will stay either north or south.
Let's talk about that. That's a good question. The question relates to average trading range and how it kicks in and when it kicks in. Let's suppose let's suppose that price action coming into the session is low and it's at the bottom of the scale. It's below the central pivot point and it's at a buy point at the very bottom of the pivot scale, okay? And you have indications that would tell you the price is going to go up, like maybe you've got a hammer spinning top, positive divergence. You can rest assured that your full range is probably going to head north and be captured all the way up through the buy area, through the pivot point into the sell area. And you're going to catch those 76 pips. Now, the reverse is true. Let's suppose coming into this session, the new session, we had a head and shoulders pattern the night before, or we had a symmetrical triangle in a downtrend. You know that we're going to have price weakness coming into the new session. So if price comes into the new session in the sell area above the pivot point, like this, and it's heading down, you know it's going to fall through the resistance area and into the buy area and keep on going to capture the 76 pips. The key here is the average range usually is fulfilled during the London hours. And it's either going to do this, or it's going to do this, or in some cases it does its full range up and its full range down. Or sometimes it'll do its full range down and its full range up. So if Don got in here, as Emily said, right about there, this mouse is difficult to use, right there, you'd put your stop 20 pips away.
Right.
Then when you captured a 30 pip run, you'd move your stop up to that entry point.
Exactly.
That's cool. Actually, would you move your stop up to your entry point or just underneath the pivot point?
Ooh, better yet. Yeah.
I would move it underneath the pivot point.
Yeah, that's a good point. Move it up to maybe 5 pips below or something, so you don't get.
I'd say 5 pips below the pivot point.
Okay.
But sometimes it could come back against you when you're trading like that.
This is the disadvantage of moving stops up. I actually like George's example we talked about this morning, where he has limits at each pivot point, or if he's watching the screen, he will actually pull the trigger. If he sees price 5 pips within the pivot point, he will actually get out of the trade and then get back in when it goes through the pivot point. But I like that idea as long as...
I'm nervous because I'm new and I'm looking at so many things, trying to remember all of the rules, and did I miss something? But I feel like it's just a fail-safe
Sure.
now, and I may change that later when I'm more comfortable.
Yeah, sure.
But to get started, it gives me a level of comfort.
Don, whatever works for you, this is all about what works for you. And it doesn't really matter what anybody else thinks, because nobody can argue with putting money in the bank. In this business, there are no rules. There are just lots of good ideas. And your strategy will be different from George Smith's strategy, and Vincent's will be different from somebody else. But there's nothing wrong with any of the strategies, because the permutations and commutations are all over the place. But I like your idea. I would just put the stop on the other side of the pivot point. I think it's a great idea.
Is there something that will draw or overlay the pivot points on the chart?
That's a good question. The question is, how do we get the pivot points on the screen? At FX Solutions, all of the market maker brokers have a drawing tool where you can draw the lines on the screen. They're not all easy to use, but it can be done. That's how you're supposed to do it. But there's nothing wrong with printing off the Excel spreadsheet and having that as a handy reference while you're trading, because the most important thing that you want to know at any given moment in time is where is price in relation to the nearest pivot point. Because you're always asking yourself, how is price going to behave around that pivot point? If you don't have the line drawn on the screen, well, okay, it's not a big deal, because you're only thinking about one thing, or two things, price and nearest pivot point. And then if price goes through that pivot point, then you're thinking about another thing. What's it going to do at the next pivot point? So don't get really hung up on the lines. But
Well, it's just to facilitate kind of seeing things.
it's better to have them on the chart. And they all have drawing tools. You can do it. FX Solutions they've got some difficulties with their drawing of lines, but that's supposed to improve. And by the way, wherever you're trading, if you see things you don't like, make sure you tell somebody, because that's the only way they can improve. So don't just accept idiosyncrasies if you don't like them. Okay, what would you do here?
Long.
Why?
Railroad tracks and the divergence on the right. Price is going down, MACD's going up, and you've got a railroad track.